I haven't been so excited for a project since I bought Mount Marion. We're a very strong company in terms of our balance sheet, our human and our financial resources generally, from the board all the way down to the receptionist. Identify it, build it, monetize it, and return the value back to shareholders.
Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up and please leave your comments below. It just helps us to try and understand what you're thinking about, what concerns you, what questions you'd like us to ask, and your general mood about different commodities in the marketplace. So please make an effort to do that. And if you haven't already done so, another plead from me, please click the button in the corner of the screen to subscribe to our YouTube channel. It just, again, it really helps us. And if you want to see more videos like this, you can always click the notification bell. Today we spoke with Chris Reed, who's the CEO of Neometals. They're a project developer focused on the battery minerals and battery space generally. We quite like their business model. We've been talking to them over the past few months and learning a bit more about their projects. Today we talked to them about one of their newest projects, which is a high-grade vanadium project which they've just signed with Critical Metals. That is a slag project. The slag belongs to SSAB in Sweden. Now, this is going to be able to produce high-grade, lowest cost vanadium in a socially responsible way. They're also plugging into the European battery ecosystem there. So there's a lot of things to get a hold of. We talked to Chris and his team about how they're going to deliver that technically. Like I say, we like the green component of this, and we just work out how green this actually is. We talk about a lot of different topics. Take a look at the description below. Anything interests you in particular, you can click on that timestamp and that'll take you to that part of the video. So let's hear what Chris had to say. Good afternoon, guys. How are you?
Very well, thanks, Matt. Greetings from down under. I'm joined today by our Chief Development Officer, Darren Townsend, and our Chief Metallurgist, Dave Robinson.
Hi, guys. Pleasure to meet you. First time I've spoken to you, chaps.
Yeah, nice.
Well, I think you're all holed up like we are at home, doing your social distancing, being responsible citizens. Is that right?
Look, that's correct. I'm the only one in head office today, so the CFO and I alternate days in head office, work from home remotely. The rest, Darren and our Chief Operating Officer and the Financial Controller sort of run a shadow management team in case we get COVID-19.
Well, I was speaking to Darren just before you joined. He said that productivity is higher now he's at home. That can't be bad, right?
Well, I must admit, you do have less background noise and less interruptions, and look, he'd be coming off a low base.
Right.
No comment.
He started it.
Okay. Well, look, Chris, we wanted to talk to you about the announcement that you guys have put out with regards to the high-grade vanadium recycling deal, because I think you are very much moving into this battery recycling space, this battery minerals space now, having been a miner previously. But why don't we kick off and remind people where you've come from, what the background is, and why you find yourself in position today by giving them a sort of 1 minute overview, please.
Yeah. So Neometals is a project developer. We use innovation essentially to develop industrial minerals and advanced material projects for a sustainable future. And so we targeted the EV and energy storage thematic, almost 10 years ago, and we went out and procured a lithium project, and we developed that into what is now currently the world's second largest hard rock source of lithium. We exited that project. We retained offtake from the lithium mine, and so we've got a number of projects that are not really upstream. There's a slight pivot away from the upstream traditional hard rock mining into further downstream processing. So we're looking at a lithium hydroxide refinery. Obviously the lithium battery recycling project is our main project. That's taking the lithium batteries at the end of their life We've got the Barrambie Titanium Vanadium Project, which is an upstream asset. They've been working on a downstream processing technology. And this latest agreement with Critical Metals to look at recovering vanadium, essentially recycling a slag product from steel making, is consistent with that pivot away from upstream, and also in terms of recycling and, I guess, becoming more sustainable.
Okay. Now, again, I just want to, before we kind of get into the detail of it, I want to, again, if you get your help to remind people, because we look at your business model and we think it's really attractive. It's kind of unusual. There's very few people approaching this the way that you do, because we get a lot of people coming on the show telling us about what they're going to put into a battery. And you guys are saying, well, actually, there's, you still got to deal with stuff, after batteries are made. There's you've got your battery recycling project as well, which we've talked about on previous occasions. But can you give us a insight into your business model? Because you've got a lot of cash from the Marion deal, but you're spending it frugally by doing this project generator model. So give us an idea of what that looks like.
Yeah, certainly. So first of all, we identify a thematic that we want exposure to, which is the energy storage thematic and electric vehicles. That then drops down the commodities within that thematic that will be most impacted in a positive way. And so what then we do, we either acquire an opportunity in M&A, or we develop one internally. So the lithium battery recycling technology was to develop a process to take these batteries at the end of life. We realized that we could see the lithium battery plants being built. We could see the volumes of lithium batteries that would ultimately hit the market. We knew statistically about 10% a production or a scrap in the production process, and that they have an effective life of 7, 8, 10 years. So there was going to be the opportunity for these significant volumes of, essentially, which is an amalgam of lots of battery minerals or battery commodities all together, and that currently they're either being melted at poor recoveries or put into landfill, and that's not sustainable. So we developed that internally. So what we try to do is identify the opportunity, secure it, build the value in terms of the metallurgical test work to prove our advantages, our low cost nature, our high recoveries. And we take the risk there. Then we do the engineering studies, and then what we like to do is to bring in big partners to commercialize these at the optimum scale, which is quite often beyond companies our size. Now, we have a fantastic balance sheet, but we're not going to roll the dice and put all of it into one project. And so what we did with the lithium project, we acquired the lithium project. We took the risk with the drill bit and made it bigger. Then we did the test work. We were able to capture a multi-billion-dollar company to build the world's largest hard rock lithium concentrator with no upfront capital. We then took that as a package to the world's fastest growing lithium converter, Ganfeng, offered them to be a partner. We were able to ultimately build a plant 4 times bigger than we'd evaluated ourselves. We sold out on the way. We made $200 million out of a $3 million investment. And last Friday, we returned another $11 million, taking our total returns to shareholders to over $55 million over the last 5 years. So identify it, build it, monetize it, and return the value back to shareholders.
Yeah, I mean, thanks for that. Again, it's something that when we first came across you guys, we weren't quite sure, what you were, but after investigation, you look at dividend paying. That's a lot of dividend.
I can synthesize it for you. It's the highest return on invested capital in the shortest period of time.
Quite nice. I've got nowhere to go with that.
That's right. It's just arithmetic.
Just arithmetic. But the other component of that is that you spent $3 million to be able to generate that kind of return, and that seems to be. And I don't mean to sort of oversimplify this, but that kind of cookie cutter approach to what you're doing. I mean, it's what we've heard with the recycling story, and I think it's what we're about to hear now with the agreement with Critical Metals. So why don't we get stuck into the critical metals story agreement. So the announcement came out last week. Okay, in your words, tell us what it is that you've put together.
So essentially what we've procured with our partner Critical Metals is a call option to acquire what is the world's largest stockpile of high-grade vanadium slags. In that 27-month period, we're able to conduct our extensive due diligence, and that'll be in the form of a Class 5, a Class 4, a Class 3 engineering study, which will result in a feasibility study to be completed by 31 December 2022, at which point we'll consider a final investment decision. If we decide to go ahead, Neometals and Critical Metals will own 50-50 equally in an incorporated joint venture vehicle, which will have the certainty of a supply agreement from SSAB, which is the largest steelmaker in Scandinavia.
And how much will you have spent at that point to get to that point?
So we envisage that the total investment prior to FID will be around 5 million Australian dollars.
Okay, so it's kind of, it maintains that project generator feel. It's the same level of spend. What are your... Actually, let me start with, who is Critical Metals? SSAB, obviously, I think people will know, they're obviously huge, billion dollar industry, but who's Critical Metals in all of this?
So Critical Metals is an unlisted Australian public company. Neometals is the largest shareholder, owning approximately 15.4% of its issued capital. Critical Metals also holds a license for the Neometals lithium battery recycling technology, geographically limited to Scandinavia, so Sweden, Norway, Finland, and Denmark.
Right, and is this the first time? I mean, it's isolated to those countries. Is there scope to go beyond that at some point? I mean, I want to talk about scale in a second, but while we're talking.
Well, at this stage for the lithium battery recycling, we're entertaining going exclusively for the non-licensed jurisdictions with German engineer SMS Group.
Okay. Well, okay, we'll come back to that another time. So you're talking about recycling high-grade vanadium-bearing steel from slag. Can you, again, just in terms of terminology, help people understand what the difference between tailings and slag is?
Sure. So in the steelmaking process up at SSAB's Luleå and Rahi and Oxelösund operations, they use iron ore and limestone in their smelting method, and so what is left is an iron-bearing calcium product. After they've tapped off the steel, and that goes in for further processing, the slag, so to speak, gets cooled in pits, and then when it's cooled enough, they break it, put it in trucks, take it to another site on their plant, crush it, screen it, scalp some of the iron, the discrete iron, and stick that back into the furnace. The rest gets stockpiled as what they call LD slag. LD is the steelmaking process that they use.
And what typically happens with this? I mean, I'm guessing there's going to be other people with other technologies which would process slag, right?
Well, look, occasionally these guys sell the little bits here and there for road base, but essentially there's nothing you can do with it. You know, what we'll be doing is taking a material that is stockpiled on these sites, recovering the vanadium, and actually changing its color from black to white, and actually making it safe to store.
So what's the problem you're solving for them? Obviously, it's a financial opportunity for you, but you must be also, in terms of remediation, etc.
So look, I think it does a number of things. Certainly, it removes visually a stockpiled black material from sites, and these steel mills are all adjacent to the sea, and rendering them in an inert form that is safe for storage, either backfilling old pits or other applications, you are providing a remediation service of sorts. It's obviously highly economic to do that in the process that we have developed.
Okay, well let's get into the terms then. So, in terms of what it is that you've got today and what you think when the 50-50 joint venture is in place, what are your commitments to that financially? What do you think the upside is in terms of revenue, and where do you think that can go?
Yeah, certainly. I think if you have a look at the purchase agreement that we will have after FID, which is a conditional agreement now, just to be satisfied essentially by our final investment decision. We would purchase the steel slag with the vanadium content. The benchmark grade that we pay is 3.9% V2O5, which is 2 to 3 times higher than any primary producer can make in a concentrate before a similar level of processing in a hydromet circuit. So it has exceptional grade. One, you don't have to build a mine, and you don't have to build a crushing plant or a grinding plant or a magnetic gravity separation plant, or indeed you don't have to build kilns for the traditional salt roast leach process. So in essence, you've stripped more than 50% of the capex straight away. You don't take the mining risk. It's already stockpiled. It's been accumulated over 30 years and sampled almost daily. So your confidence in the grade is almost without precedent. So you've got a very, very long life supply of a very, very high grade material. And, ceteris paribus, that should lead you to be at the bottom end. And certainly our project strategy is to drive this project to be the lowest cost vanadium production facility in the world.
So that gives you, I guess, comfort of whether you're lowest quartile or even lowest decile. It gives you comfort that you're going to be able to make margin where others can't. Because, vanadium is well known for being highly volatile. It's been in a dip. I think it's recovering at the moment, but it's essential in rebar. So there's a market for it. So are you at all concerned about the commodity itself, or getting into a project with that commodity?
No, certainly not if you are at that point in the cost curve. If you are, anywhere north of the 50th percentile, it is a volatile commodity. I think the only more volatile commodity are fertilizers. But having the high grade, the long life, and like I said, all things being equal, certainly the lowest quartile, if not the lowest. Being a low cost producer and innovating and always driving yourself down in that direction is the only sustainable long run strategy that a miner or developer can have.
Okay, and so talk to me about scale then, because if I look at people like Bushveld or Largo, two of the larger vanadium producers in the world, their market cap is phenomenal. But and we've also spoken to a lot of wannabe vanadium producers who've got kind of lower grade projects but just can't get into the market. What do you think the scale of the opportunity is for you here? What obviously you've got 2.7 million tons of existing stores. What's the incremental production from these 3 sites or these 3 operating steel mills?
So look, currently the contract with SSAB covers 2 million tons of slag, at which we would prepay to start off at the start of that contract 700,000 tons of slag from Luleå. The net additions per annum across the 3 sites are forecast to be 180,000 tons per annum. Initially, we will have a look at a processing facility that is capable of producing 200,000 tons per annum. Of processing 200,000 tons per annum of slag. You know, if it's got a head grade of just below 4 and some of the recoveries, you know, not that this is a production target, but, you know, it will generate less, you know, perhaps somewhere around 5% of the global vanadium supply. You know, currently the vanadium market would be growing by those sorts of percentages. So we don't, and certainly at the lower end of the cost curve, you know, we do not expect anyone to negatively respond to our presence.
And how did this deal come about? I mean, how did you find this?
So Critical Metals have been operating in Sweden for 10 years. They have a portfolio of iron ore and base metal assets there. They have some fantastic local talent on the board and in its management team. And it was through those relationships that we were presented the opportunity to evaluate these stockpiles. You know, we started off with a sledgehammer to crack a nut flow sheet, and then we have optimized that into our current patent pending flow sheet that generates the low cost, the potential to achieve the lowest cost.
Well, let's talk about that, because you got these two clever guys on the screen here, Darren and David. So you talk about sledgehammer to crack a nut, and you've simplified it, and simplification means cheaper. So what is it that you've got that other people don't? Why aren't there lots of people doing this?
I might throw over to Dr. Dave Robinson. Dave, we procured his services from the CSIRO, which is the Australian government-owned industrial research organisation. He has a fantastic background in titanium, vanadium, and those sorts of metals. So I might let him comment about, you know, what are the flow sheets that are generally used and why they won't work here.
Thanks, Chris. Yeah, so the traditional route to treating a slag would be most people would look at a pyrometallurgical option. So putting that material, that slag, back into a furnace and reheating it, and trying to be more selective about pulling that vanadium out using a lot of energy. My background is, as Chris said, much more hydrometallurgical, and so my first thought was to hit this material, which is very alkaline in nature, with an acidic reagent. That is the sledgehammer that Chris referred to, and we can get a very good recovery of vanadium that way. There's some other downstream issues that make it less attractive. And so we started thinking of a more sophisticated way of approaching it, and actually using an alkaline system that's very selective for vanadium leaching. We can get a very nice clean leach solution from that. And as Chris mentioned earlier, making the slag inherently more stable as well. So you're converting a material that contains quite a lot of reactive lime still into a material that's much more stable, much more environmentally responsible for dumping or for putting in a hole, and at the same time getting a very clean leach solution. And we're at the tail end of developing and finalizing that flow sheet, but we've got very good recoveries of vanadium from the minor impurities that are there, and we've got a couple of options that we're finalizing right now in terms of the actual form of the vanadium recovery, in terms of the most valuable product and the lowest cost flow sheet that Chris has already mentioned.
How long has that process taken? I mean, and how much time, money, and effort? And is it indeed now, therefore, proprietary to you?
The sledgehammer was a quick development. It was within a month we were ready to put a patent application in place. And the more sophisticated and cleverer flow sheets probably been 3 or 4 months more development, and we've got that second patent application in place at the moment now as well. So all up, probably 6 months worth of test work, and we're at the position we are now. Yeah.
And how much more efficient is it?
In terms of the vanadium recovery, we're getting good recoveries. So we're getting up in the 80%. In terms of overall recovery for the flow sheet, it's if you use the sledgehammer, the acid approach, you can get a higher recovery, but you've got an awful lot more cost involved later on in terms of the recovery. So by far the most economic approach is the selective leach. and without disclosing any details, it's a much more environmentally friendly process. It's a highly recyclable lixiviant, so we're not actually getting a single passive reagent and then a waste. We're actually recycling that reagent, so the reagent stays in the system many times in cycles. So we've got a whole lot of benefits in terms of the nature of the flow sheet that improve the economics as well as the metallurgy.
Okay, and if I may, just one last question. So at the end of this process, what is left? I mean, you're recovering from slag. So we know what you recover, but what's left and what happens to that?
Essentially, it's a much more inert material. Contains all of the elements except for the vanadium. We do leach a small amount of the iron, and a little bit of the silica goes into solution, but very little else. So pretty much all of the calcium-containing minerals that were there, most of the silicates, the alumina minerals, and many of the impurities remain completely untouched, and probably 99% or more of the iron remains untouched as well.
Okay.
It's worth mentioning too that it's conventional equipment as well. So even though we've got a patented process, it's using just standard technology, standard equipment.
Okay. Yep. Fair point. Because
for those that didn't know, Darren's the engineer.
He's Darren straight in there.
Yeah.
I mean,
he's got to make what Dave says actually happen.
Yeah. Good luck. No, I mean, it's a fair point actually, because that was going to be my next question, which is, which always comes about when you talk about, IP and proprietary, etc., which is new things frighten bankers because they've maybe not been done before. But you're saying it's kind of conventional technology, but your flow sheet works differently. So there's nothing onerous or to be concerned about with regards to how you go and deliver this. Is that right, Darren?
Yeah, that's right. I mean, we've come up with obviously a novel process in terms of how it fits together, but it is using pieces of conventional technology. So there's nothing there that's concerning to me in terms of how we may move forward with the buildability of the flow sheet.
And are you able to reduce costs as a result of the new flow sheet, or has that not really been a factor?
Yeah, we're still working on our studies at the moment, our cost studies. So they're a work in progress, but early indications are that the flow sheet will give us some definite operating and capital cost advantages.
Okay. And Chris, question for you. So then you're left with this inert pile. You own it now, don't you?
Correct.
So what happens to it?
We will take ownership of those residues. They are largely calcium and iron-bearing residue that is able to be either safely disposed of or reinserted back into the front end of the steel-making process from whence it came.
Okay. So this really, I mean, you mentioned it there a second ago. This is, I'm trying to understand the green credentials here, because again, coming back to my point over earlier, people tell us.
So I think you're operating up in Scandinavia, and so the environmental considerations. So we had the sledgehammer approach, and then we thought, well, that works, is attractive, will deliver what we want, but we are in a very pretty part of the world. We are adjacent to the ports and towns. These towns have grown up around the steel mills, and they've got ports there. And so we took care really to have a look at having the lowest environmental footprint. So whether that's from a CO2 point of view, using hydropower, the change in the medium that we dissolve the residue, the slag into, was really driven by the end products that come out the back end to make them. So you don't want to put in a process. So that the sledgehammer actually created a higher volume of waste than we processed to start off with, because you're changing it from a metallic form into an oxide form. Or indeed a sulfate form. So what we tried to make sure, we were conscious that we wanted to have a product that was inert, that we are recycling as much as we can, the least amount of materials that we bring into the site and take out of the site the better. Green power, in time we will make known a few more of the subtle other benefits that this process has, but we're not looking at discharging. We have a negative water balance, i.e. we are not discharging any liquid tailings into the environment that needs storage or subsequent treatment, and likewise with noxious gas or airborne emissions, that sort of stuff. So we've truly put our minds around this the sustainable future bit.
Yeah, okay. I mean, thanks for that. And I mean, it's kind of worth bearing in mind that's got to be a big part of your message here, because you're talking about with other, you talk about the battery recycling project that you've got going on here, and this project ESG. You've really truly got to deliver that. So I'd be interested in learning more about how you're going about that as and when you're able to release that information.
Yeah, sure. I mean, rather than just saying we're embracing the ESG reporting or whatever, I mean, we're actually walking the talk. We are changing our business, changing we've pivoted away from the more carbon intensive upstream element of the supply chain to recycling before, and to get the recycling right before we ultimately develop any more upstream or downstream resources. It's a model we actually took off Johnson Matthey. They don't enter into a new commodity unless they can actually recycle that product. If you can do that, then you can work as far upstream as you like.
That's interesting. We've had a lot of requests to talk to a bit more corporate, socially responsible companies. So we've talked to a lot of tailings companies. We were fascinated by your sort of segue from mining into this space and seeing if it can be delivered. We've spoken with the World Gold Council about what their expectations for companies are in terms of automated battery vehicles within mining, etc. So this is fascinating. And do you think it makes economic sense to do this, or is this just about being socially responsible?
That is, obviously we are a listed company. We are here for our shareholders' benefit. I don't think they're mutually exclusive. Certainly that we are targeting, like I say, the thematics, the commodities, and then we are picking our position in those supply chains a little smarter than once we would have, where we would have bashed on with a more capital intense, lower margin, higher risk upstream mining operation, because traditionally Australia's been a bit of a quarry for the world's building blocks for the modern industrial world.
Yeah, and we can't finish a conversation without talking about COVID-19. Obviously, you guys are working at home at the moment, but you do have guys in the lab. I understand it from Darren, still beavering away. Is that impacting your ability to get this agreement over the line sooner?
Look, I would have actually said it may have been the straw that got it over the line. That we had given them this contract there, that we've got an exclusivity period. We've paid for that exclusivity period, securing 27 months to get to an FID to monetize this for them. They've been sitting there stockpiling this for 30 years, so we're actually going to turn it into money for them. In terms of the COVID impact on us, I mean, we sold out of our upstream operation. We've got a lot of cash. We've been doing quite a lot of metallurgical test work across our core projects. They're now moving into the engineering stages. We finished a lot of exploration at Christmas. We've now been compiling the results, planning our next moves for those projects. So, I mean, we're not wasting the opportunity. And look, we're a very strong company in terms of our balance sheet, our human and our financial resources generally, from the board all the way down to the receptionist. And so we will pretty much move seamlessly through the evaluation stages. you know, I understand in Australia they're doing a pretty good job of getting on top of this early. I mean, it should come as no surprise. We are the most isolated country in the world with the lowest population density. So I wouldn't put that down to, I mean, it's some good moves from the government, but it should be taken as no way to try to say, we're not boasting about that. It's more a geographical anomaly. So we can, and the mining industry here is an essential services, and the government, you know, is allowing those to operate because ordinarily we have probably the highest operating safety and health systems in the world. And so the addition of pre-testing, constant testing, social isolation, or self-isolation and social distancing, when you're flying in and flying out of a remote work site, you're almost doing that anyway. So for us, we're fortunate that I can see no material disruption. Look, some of the timelines and some of the milestones might move around a little bit. Certainly there could be disruptions in terms of, you know, the global macro basis, but to get to FIDs, we have multiple years of surplus cash flow. In fact, as a sign of our strength, we accelerated the consideration of a dividend that we've done annually for the last 4 years. We brought it forward by a month because we are in such good financial position. We've got more than $80 million in available cash after the dividend. We have no debt. And so we can execute our plans to take all 4 projects through to final investment decisions without having any regard to our underlying balance sheet. So look, it's not lost on us. We are fortunate, and for everyone, you know, who's not so fortunate, you know, we do understand and feel for them.
Okay, no, appreciate that background. I do need to try and understand though where this is going. So JV happens, you start processing. Are you selling into Chinese rebar market, or are you going to be part of the European ecosystem? And where's the
yeah? Look,
where's this going?
Certainly the industrial minerals and the advanced materials attracted us because you don't have the financial investors, right? So they truly are price, value, and use. And what we're seeing across a lot of these commodities is a real bifurcation. In lithium, we saw China v the rest of the world. If you have a look at vanadium, that is essential in producing high-strength, low-alloy steels, titanium, vanadium alloys for aerospace, it's non-substitutable. And it's increasingly becoming prevalent in energy storage, these VRB batteries. You know, the electrolyte in the batteries, 50% of the cost of the battery is vanadium. You can't call it a vanadium redox flow battery without the vanadium. So demand's growing. And so what we're seeing is, you know, about 80% of the world's vanadium coming out of China and Russia. And so when you have a look at, aircraft airframes that are 18 to 20% now in the new generations vanadium titanium alloy. Now that the vanadium, the master alloys, either come from, you know, Bolong in China or VSMPO in Russia. So you've got Boeing and Airbus that are entirely reliant on, I'll say, non-free market sources. So, you know, for us, we would obviously look at geographically delivering into Europe and North America as those key markets if you're operating up in Scandinavia.
So, and are the Europeans pleased to see these sorts of things, these sorts of operations, these joint ventures? Because we've talked to companies who are, you know, trying to tap into these big EU subsidies to kind of get things going. I guess you guys don't have that problem, but have you had conversations? Are they interested in what you're doing?
Oh, look, you know, we've had obviously keen interest, not only because we do have the world's second highest grade hard rock titanium vanadium asset in Barrambie. We speak with most of the big players reasonably regularly. Certainly I know in Germany, if you're importing vanadium into the steel industry there, you know, they have an import finance scheme as well as an export finance scheme, which is generally the UFK or the German government guaranteed schemes. If you are doing import financing, you essentially take your production times a long-term price times the duration of the contract and divide that by 4, and that's the amount that you can look to procure from German commercial banks with a German government-backed guarantee. So security of supply for essential materials into one or more. I mean, we haven't explored obviously our relationship with SMS. We have explored import and export financing. We seem to think that the import financing happens a little quicker than the export financing. And so, yes, there are pools of money from a strategic point of view, green funds, circular economy, ESG. This will tick all the boxes.
Okay, thanks, Chris. So just to kind of sum up, because what I've heard is high grade, highest grade, you're telling me, lowest cost, no capex, or relatively low capex compared to mining. You've got the and removal of mining risk. And that's where a lot of miners have got it wrong. That you stick so much money in the upstream mine, and because you're always getting pressured to do these things quick. Okay. There's some people take unacceptable risks, or they could have taken longer or with more money, but that's dilutionary stuff. So removal of risk. Okay, removal of risk. You've got the ESG component. You're telling me you're part of that absolutely. Kind of circular network within Europe, and you think that you can get that funded from any funding with you and your partner can happen from Europe. That's what I'm hearing. Am I missing anything? No, absolutely. Look, we are genuinely stoked with this opportunity. We have 27 months to get through to an FID. I cannot see any fatal flaws at this stage, and hence why I've been able to procure the board to authorise the staged expenditure of 5 million. I haven't been so excited for a project since I bought Mount Marion. I bet. Well, Chris, I appreciate and Darren and David, thank you very much for today, giving us that update on that agreement. And it sounds like exciting times. I'm genuinely really excited by the approach with companies like yourself and how they're tackling this battery revolution, how they're getting involved and where they're inserting themselves. And you seem to be very focused on the making money bit, which is great, delivering in a responsible way. I was really pleased to talk with you about the battery recycling component, but this one sounds even better. Yeah, well, you don't have to worry about going out and procuring the supply. Yeah, no, well done. Well done. In terms of like battery recycling, you're trying to pull out physically copper and aluminium, graphite, plastics, and then you're trying to sequentially drop out the leftover cobalt, aluminium and iron waste. Then you're trying to get out cobalt sulfate, nickel sulfate, manganese sulfate, lithium sulfate, recycle, your tailings stream. I mean, it is unscrambling an egg. This is literally just cracking an egg and cooking it properly. There you go. And making sure you don't burn the toast. Looks like you've got a couple of eggs on the plate, both very good. I wish you well. Stay in touch, please, and let us know how you're getting on, because obviously you guys seem to be quite fast moving and you've got a few projects in the portfolio, I know. So give us a call. We're grateful for the time. You keep well. Everyone, keep safe.